Welcome to TradeTheMBI.com. This is John. This report is for the 23rd, starting with the Monday. So we ended up Friday with a nice push after they tested the lows, right back down to the green ABM exactly, and then just pressed it right up there. We'd seen the strong move of the cyan shorts moving right below. They had increased the last few days to a significant portion where we pointed out that the ripe opportunity for them to get squeezed. And the giant spike here of the orange for a short coming under, obviously the steel had been completely reset for some time. The dip barely below the negative 45 line here, which is usually bullish going forward when you don't go below the negative 61, and sure enough led to a nice pop from there. It was still within an overbought condition. We knew that. We knew it was easing as well. The fact that we've been maintaining this red well above zero means that we're just in a consolidation, and there was enough room there to squeeze just a little bit. We'll probably get a little bit of a pullback inside of it now. I think there was enough to complete the Iron Hawk trade. Go ahead and look at the statistics on that. So performance reports very close to new equity highs there. Return for the year, 50K on that one. Not bad. I mean, it just continues to plug away. Excellent win rate. But it's a slow, methodical way. But sometimes that's the best when you're not overly involved. It actually produces much better when the market is choppy and you get dips that pull back. And we haven't seen a significant dip in a long time. So, there's just too many factors pushing this forward. And I know that now you're starting to see people rediscussing valuations and the fact that, yes, if there is inflation, then in fact, that alters the scenario. These people are so late to the game, it just cracks me up sometimes. NASDAQ, though, has been struggling. I mean, it hasn't shown the broader S&P, and that, the S&P is favored somewhat more, too, by the euro and the fact that it's not as super tech heavy. The euro maintaining this elevated level. It's outside the range of the 115.5 to 109 range. As long as it stays above there, that actually bolsters the ES or the S&P in a broad way. This is not unexpected. We've been waiting for this. People starting to realize, oh my goodness, what's going to happen if the Fed raises rates again here in December, because the economy is still continuing to plug away. Though we already did see what those interest rate increases meant for the deficit. Those numbers came out last week as well, and it was a big jump. In fact, most of the debt was associated just to the interest rate increase, and that is going to be an interesting ongoing factor going forward, particularly on how the U.S. handles its budget, because that is going to be a devastating crippler when you go from the zero rates, which is why they were so happy to maintain no growth policies for the last decade. So it's going to change things dramatically, unintended consequences, so to speak. USO, it's going to stay in this range. We expect it to stay there. We think that the overall global demand is going to rise as economic conditions continue to get better and better. And gold, struggling, inappropriate. We'd expect a little bit more of an inverse relationship arise here, but we knew this was in a bit of a malaise with the dip right here below the red line, and then the pretty soft readings, unable to break into a new range with the red, and then just fading back on the DOC here meant that no real serious long-term buyer interest, at least to move things rapidly, not to mention you don't even have a reset of the short-term buyers in the steel. So it's keeping it in a soft pattern right now, but I think that buy is coming up. Here's what the 5K looked like. We had that buy from way back here, and it has not abated. That was all the way back, 49, 74. So it was a pretty decent run, just going straight up. And again, I hear the gloom and doom articles, and so do you. You just have to kind of tune it out, or don't even look. And if you stick with what the indicators are giving us, they've been telling us to go long for quite some time, all the way back before, 1400 range. Here we are, a good 1,000 points over that. So we've been spot on with it. We're going to continue to be, and that's just a matter of being able to recognize where the algos are at, because if you can follow their money, then you're doing the right thing. And despite all these articles where they tell you all the big money is out, it's just baloney. It's no other way to describe it, because it hasn't been accurate. They've been talking about it for 2 years that all the money has been out of the market, and yet we still keep rising. So yeah, they've got their pulse on that one really fantastic. So good for them. It's not doing very well as far as making them any money, though. As always, though, trade well. We'll talk again on the Skype chat.